In this video, we're going to be looking at the data and finding out exactly where the market is as far as recovery, and then also looking into different markets and finding out if there is still potential for master leasing or co-hosting. So stay tuned. Vacation Rental Machine helps hosts just like you learn how to start, grow, and scale your short-term rental business. This show is all about creating systems that help you automate your business, giving you more time and money freedom. If you're ready to start living the vacation rental life, then subscribe to this podcast today. Come and join us on our Facebook group, The Host Nation, where we'll be talking about starting, automating, and scaling a short-term rental business. Now, on to the show. Hey, welcome back, Host Nation, to another episode of Vacation Rental Machine. I'm Julian Sage with John Bell, and we have an exciting episode today because we're going to be diving deep and looking and analyzing markets and looking at some of the tools that are available for us hosts to be able to see if we're coming back from pre-COVID-19, now we're moving forward into the future and finding out exactly when is a good time to be investing into the short-term rental space. So if you're listening to this on podcast, I recommend you go to our YouTube channel. Just go to Short Term Sage and you can find our latest videos on there. Because in this video, we're actually going to be diving into different tools such as Zillow and Airbnb and some of the other tools that are available and looking at the data and the markets that is available. So John, things have been kind of laying low for the past few months. You know, as we've been coming out of COVID-19, a lot of hosts have been hunkering down, trying to get in long-term tenants and just trying to weather the storm. So the beauty of short-term rentals is that they are a very flexible niche. And us being managers and investors want to know if we are going to be investing into a particular market, are we going to be able to profit? And does it look like it's going in an uptrend? So John, if you wouldn't mind taking us into some of the data that is available, and let's take a look at a market that you've identified. Now, again, take this information with a grain of salt because every market is going to be different. There are markets where the occupancy has definitely increased, but that doesn't mean that the rental rates of the properties has increased significantly. But because occupancy has been going up means that demand is going up, which means that prices will eventually start to creep up to their pre-COVID-19. But we do want to see if there are markets where there is still profitability as an investor. So John, if you wouldn't mind sharing with us exactly the types of information that we should be looking for.
Yes. Okay. I'm going to share my screen, but first let me give a little disclaimer. I apologize to everyone that's in the VRM formula. You're probably going to see this again just because we went over it a couple of weeks ago. If you guys are not in VRM formula, then you are kind of getting some stuff delayed, but we are already pouncing on a bunch of this data. So let's just take a look at what we figured out a couple weeks ago. So right now I am taking a look at Price Labs. Price Labs has collaborated some COVID-19 data from all the bookings that they can pull from all the people that use Price Labs and the booking platforms. And this is what they put together as far as a dashboard that shows some of the recovery indexes. And I do check this pretty frequently, and you guys should check it as well. It's pricelabs.co, and you can go right over here to this COVID-19 and select whatever data you'd like to see. From here, what we first see is this color-coded map, and you'll see that there's just a few states that are left that are completely red. New Orleans and Hawaii are about the only two that are really just at a standstill right now. Everybody else has started to see some type of recovery, but we want to kind of focus on something that isn't all the way green just yet. So we're going to pick a place that is a little yellow in transition. And because I got flamingos on, we said we were going to do Florida. So let's look at some of the Florida numbers. So here in Florida, one of the first indexes we're looking at is future stays and cancellations. Why is this important? Because when COVID-19 first started to hit, we were getting a lot of cancellations, and this red curve was extremely high. And I use that as a confidence curve. So when people are canceling reservations, they are no longer confident that they are going to be able to stay at this place, or they're not comfortable with traveling in general. As you can see from this is relatively flat. And for me, I think this looks normal. What we do see is a small new booking curve, which is green. And we see our occupancy from today on down. However, it is a slow curve down. I'll tell you why that's somewhat important. It's really because people don't really book all the way out here, and you won't see that curve really ever go up unless it's like a super special event like the Super Bowl, which we don't even know when that's going to happen now, or something along those lines. So we do see little pumps and spikes. I can almost guarantee you that there is some type of an event that is going on at that time. So we see July 4th, there's a spike there. So this is really good to kind of get into. And this is really just predicting the future. The next data point that they put together is pretty much a 7-day running average of bookings that are coming into the area. And what we see is some hips and valleys. But for those of you that follow stocks, you can see that there is a support line right in here somewhere just above 40%, which is really good. I mean, as you can see further back, we were well below that number, and support was somewhere around 30%. All right. So I like to show these next two charts at the same time because they are really the bread and butter of short-term rentals. All right. So why do we like short-term rentals? Let's just go into that just a little bit. We like shorter-term reservations because they normally bring in the most amount of money when they are booked further out. So when they are booked 15 to 20 to 30 days out, they have a nice premium on top of it, which is really good for us because that's when we know we're getting the max profit. For everybody that's listening to this, you most likely should be using some type of dynamic pricing, which means your pricing probably goes down as the days and the occupancy is not booked. So you're cheaper if somebody wants to book today for tomorrow than somebody that wants to book 2 weeks out. You're going to be a higher price. So these two charts show exactly that. This is the booking lead time over the past 7 days. So what this chart is saying that, hey, people are booking 2 days or fewer before they stay. This line right here is 3 to 7 days, and we still see a decent mix of 30 days and less. If we were to really take 30 days and less and go down to about the 3-day mark, that is a good chunk of what's there. It's not 50%, but it is a good portion, which means people are starting to make some profit on some of those numbers. They're not just minimum price and maybe just a little bit of profit. But you do see that this 2-day or fewer lead time is primarily the driving force right now. And this number will most likely be the important number for people that have taken long-term reservations and just aren't available to book yet, because their longer reservations are still inside of the units. So these might just be the people that didn't pivot exactly right that are available and they get bookings. That's all great. They're still getting bookings. People are going to love just any sign of the recovery. So let's talk about length of stays. We know that Florida right now is pretty much going to be the beach destination. You want to get in before all the hurricanes kind of start coming. And I think there is one threatening right now. But for right now, people are booking 2 days or fewer as a majority in Florida. Still very good, but it's not great because the combination of the two graphs shows you that they are booking 2 days or fewer within 2 days or less, which means very, very minimum price. If let's just say your minimum price was $100, you might be right at $100 for this reservation per night. Instead, a person that books it 2 weeks out might be paying $150. So we're hitting that minimum number, but we are seeing people coming and staying, which is still very, very, very good.
So, John, can we take a look at a market that is a little bit more green and see if there is a difference in that booking time period?
Absolutely. Which market would you like to look?
Let's do Alabama.
Alabama. We're going for the greenest. All right. Here it is, Alabama. Same charts, right? Look at this cancellation line. You see how it's like relatively flat. There's really no movement here. That's actually great. And we have a good new reservation line. It's still trending down, of course, but it seems to go out longer. This curve for occupancy seems to start off a lot higher. So we're starting off a lot higher in occupancy, but then we're still trending down, which is absolutely fine. But look at where we're trending down at. It really gets to about the 50% mark around July 23rd. So we're sloping down, but we're still got good reservations out for at least a month. All right, so we're now talking about new reservations that seem to come in on a running 7-day average. And this support line looks like it's right at this mark right here. And that is great. That means it's stable. I mean, it looks really good. Let's look at this. This is really colorful. I don't think we had this much color as far as the booking lead time on the other chart, at least so big of a span. And what you can see is not too many people are booking 2 days or fewer. There are more people booking 3 to 7 days. So this is really saying, hey, this market is got a good mix. And this good mix means that people are making money. And it could be better numbers than last year because a lot of people got out of the game. With a lot of people not necessarily being in, people can then jack up prices. And because there's not so many offerings, you're able to capitalize on that. And that could be a good move. One of the last things here is we don't see too much of a top end. We don't see a lot of those 30-day reservations. We see everything looks to be 14 days or less. So for us short-term rental guys, this is a good number to see. That just means the long-term rental market is no longer existent in this space. And knowing this information does help you pivot just back to what you knew before, but you might still have a good mix of maybe I do give steep long stay discounts because I still don't know if everything is going to be open forever or how this thing might work, but you are still accepting these good reservations at good numbers.
I think it's important to notice on these graphs is that where Florida was on that rolling 7-day lead time, it was a lot higher. We said that it was around about a 50% of the bookings was about 2 days or fewer when they were making those reservations, and that was still even to this day. But as you can see from this example from Alabama, Alabama had a much higher 2-day or fewer booking time during that April to May, early May time period, or now late May and early June, that has dropped down significantly. And you can also see the 30 days also increasing, the lead time as well as the 14 to 30 days also increasing. So these are strong indicators that the market is recovering, at least in this particular market. Again, it's going to be very market dependent as we saw in Florida, but that doesn't mean that people still aren't able to profit from Florida. And that's what we're going to be doing in the next episode is we're actually going to be diving deep into a particular market. We'll use a couple markets as an example and show you that there still is some meat on the bone for short-term rental operators to be able to profit. You don't need to just have long-term rental or medium-term guests in your units to be able to profit during this time. But again, the beauty of short-term rental operators is that we are very flexible and able to pivot our business according to where the market is. So question of the day, which market are you in and where are you on the recovery index? Are you really green or are you still in a market where the booking window is very low? Leave your comments in the comment section down below and be sure to subscribe to us on YouTube or the podcast as we put out new content every week. And next week, again, we will be diving deep into a particular market and showing you exactly how much profit there is in these particular markets. Until next time, Host Nation, keep on hosting. If you'd like John and I to answer your guys' questions, then be sure to go to the Host Nation Facebook group and use hashtag AskVRM. Hope you hosts found value in this episode. If you did, please go on over to iTunes and leave us a review as that would greatly support the show. If you'd like to connect with John, the community, and I, then go on over to our Facebook group, The Host Nation. Talk to you hosts in the next episode. Keep on hosting.